Hello, everyone, and welcome back to another episode of the Nord Search podcast. And this episode is the first of 2026. So happy New Year, everyone. Today, very happy to be joined by Ioannis Boukas, who is the head of Algo trading for batteries and renewables at ENGIE. So, Ioannis, thanks for your time. Welcome to the podcast. Happy New Year.
Hi, Patrick. Hi, Happy New Year. Thank you very much for the invitation. It's really an honor and a pleasure to be here. I'm really a big fan of your show, of your podcast, and you've really managed to invite some very important guests, giving some seminar talks. So glad to be here and have this conversation.
Likewise, thank you very much. Always glad to hear people like the podcast, and you were recommended to be a guest. So yeah, there's definitely people interested in what you've got to say. And just in general, from my perspective, I think in this podcast we've done a lot of episodes from a more of a prop trading firm angle. But what I really wanted to do as well is talk to big people at roles like yours, algo trading at big utilities, because I think that's a really interesting conversation to have, because obviously you guys play such an important role in the market, given all the assets that you have. So yeah, really happy to have that type of conversation today. But before we go into that, as always, I would like to start with an introduction to yourself, bit of career history, and your role and what you're responsible for.
Right. So my career, let's say, started first from academia. So I graduated with a PhD in storage optimization in the short-term power markets using machine learning and operations research. I was really lucky to collaborate with great professors in the fields of operation research and machine learning, in particular the University of Liège in Belgium, which has a long history of the intersection of power systems, energy markets, and machine learning optimization. Back then, batteries was not really a mature technology. I'm talking about 2016 when I started. But I had the chance to do an internship as part of my PhD program in the trading floor of ENGIE. And really that's when my interest peaked. So in fact, back then the discussion was about how can we improve the trading of pumped hydro assets.
Yeah.
And what would be the value of storage and flexibility in short-term power markets in light of the large penetration of renewables that was anticipated towards the next 20, 30 years. And so, while it was a nice, very interesting collaboration and PhD research work, it was unthinkable to make fully automated trading decisions for large assets, especially in a utility at the time. Think of it now, 10 years later, things have really, really changed, and I'm really glad about it. So that's how it all started. Then after my PhD, after my academic career, I wanted to be involved in something a lot more practical. And thus I joined ENGIE as a data scientist, really starting, let's say, kind of in a sandbox environment, creating some machine learning prediction models that would first generate signals for the traders, and then gradually going to market. Then there was, I'd say, a management decision in light of the large battery assets that would come in the portfolio of ENGIE to create a desk that would be responsible to trade automatically, algorithmically, these batteries. And so I joined this desk as an algo trader at first, and then I took on the role of the head of this desk.
Yeah, so I think that's quite an interesting like your career history, I think, is a good example of like how the market has moved and the skills have evolved to be in this industry. So, yeah, like 10 years ago, there probably wasn't many people with your skill set in working in utilities in roles like this. These roles have been created in the last 10 years. But yeah, also looking at algo trading, bringing in machine learning talent, bringing in PhD talent who have that skill set and can come in and then start working on signals as a data scientist. Like we've seen that market transform. That's where we do a lot of our work. But then, as you rightly say, like when it came to batteries, there was a real need to create a team that can do automated trading. Because I've heard many people say like it's nigh on impossible now to trade batteries manually. Is that fair to say?
Yeah, absolutely. I mean, trading a battery in a manual way is, I think, far from optimal. I'm sure we're going to talk about it in the next minutes, but especially in the way that battery trading and optimization transforms in the next 5 years with large penetration of batteries and so
Yeah.
on. Being close to optimal is going to be essential for the business case of batteries. So, that's what management rightly and correctly predicted back in 2 years ago. So then they decided to form a team. Right now, the team consists of 6 people plus me.
Yeah.
The scope is limited at the moment. So we have really, as you mentioned, batteries, renewables, and proprietary trading. So those are the three core activities. And we have, just to mention, we have right now live 2 batteries in Belgium that were commissioned in September and October, 2 quite large, like 100 mega. Well, in total, it's 200 megawatt and 800 megawatt hours. It's really one of the biggest battery parks in Europe right now.
Wow.
Then we have at least 800 more megawatts coming between 2026 and beginning of 27. So,
Wow.
and we're talking different countries. So there is batteries coming in Netherlands, in Germany, in France, and Belgium, more capacity. So really large, quite ambitious, pipeline on batteries.
Exciting.
Even more ambitious on the renewables. So we are talking, renewables business is a lot more established within ENGIE and generally in Europe. There we are talking about around 5 gigawatts in Germany and less than that, but still summing up to around 5 in the rest of Central Western Europe.
Yeah.
So this has been an established process of trading, which we gradually onboard and automate as part of our mandate to fully trade algorithmically. Next to this, we have a prop trading activity, which is limited in the sense that, we are a utility, you mentioned it right from the start, and the core thing that we do is asset optimization and trading. When we started, though, we thought that it's very important to set up this prop trading activity for 2 reasons. Reason number 1 was it was a lot simpler. It is a lot simpler to start with the prop trading just because you don't have the complexity of the communication to assets connection and all the constraints that brings. So this helps you with establishing the right infrastructure to perform the activity without this complexity. And second, this kind of activity helps you also with uncovering and capturing market opportunities and arbitrage opportunities that then are useful to guide you also through the asset optimization world. So this was the first, let's say, activity we embarked on. But
Nice.
obviously, right now it has decreased just due to necessity of onboarding new assets and so on.
Yeah. It's a good point. I've heard this before, that like prop trading is a great place to go and test and work on some new ideas and get that feedback and in the market, with low volumes and with the assets in mind, that like, hey, we can create some good algos, and if they work in the continuous market, we might be able to use them also similarly in for asset optimization. And it's more of like a research field. Is that how you view it as well?
Yeah, it's precisely that. So, in fact, many of the prop trading strategies started off as ideas for solving problems that we would have with the assets, and then in very small volumes, you go out, you operationalize, you test, you see how things work, you tune. And then you get a good understanding of how this would work with large asset in Belgium, for instance. Just to give you an example, you have, say, low liquidity in Belgium for some hours of the day. You would like to see how would you be able to offer your flexibility without being penalized from the low liquidity, and what's your opportunity cost or your alternative when facing imbalance, for instance. So just to paint a picture, I mean, this is not it's just an example, but it really has helped us in both fronts: infrastructure development and testing out of ideas.
Yeah, no, I can imagine. And it's interesting, like that thought process of like you start with the asset problems, and then you create a prop trading strategy to see if it works for prop trading, knowing that it probably will likely work for asset as well, because that's where the initial idea has come from. And much synergy is there with a good prop trading strategy working for asset optimization, or does it just completely depend?
Yeah. So just to to clarify, it has to be, generally speaking, totally, for compliance reasons, they have to be totally separate. So then that's the beauty of algorithmic trading. So every decision you make is based on data. Previous guests of your show has done an excellent job at illustrating, how important data is, and also setting up the right data infrastructure. So algo trading, and the beauty of it is that you start from data and you work all the way to decision, and you can perfectly audit trail and track, the decision and how it is made. Because for compliance reasons, you need to separate totally, decisions made for assets and without, and we definitely prioritize at all times decisions made for assets. So if there is any kind of conflict between, value trading or prop trading and assets, it will always be prioritizing the assets. And obviously that makes sense. And we put a lot of importance on that. So it's really just first testing out some ideas. If they work and there is benefit to gain for the assets, that's where we proceed with developing the strategies and definitely integrating there.
Yeah. Interesting that you talk about, obviously, the importance of data and infrastructure. So, I think that was something that was talked about, and we've got a lot of positive feedback on from Pierre Emmanuel recently. But like, was that your approach too? Like you talked about, like when you set this up from scratch, like you guys did. Could you tell us about like the view on what you did with infrastructure? And
right. So indeed, so we started off with data, right? So ENGIE, being a large, organization and so on, there is pros and cons. The pros is you have a lot of data in general,
Yeah.
right?
Yeah.
Cons, those data are not always well treated and they sit in different places. So, one of the first steps that we took was to try to arrange and set up a right framework, exactly as Pierre Emmanuel mentioned in his podcast about setting up a right framework where data lives, how it's retrieved, in terms of what kind of frequency you will need to extract this data at, what is the right mapping, right? So we have really
Yeah.
dedicated teams working on, fetching, mapping, retrieving, historizing, so creating the history of these
Yeah.
signals. This is a process that started off, let's say, quite early on. It's still
Yeah.
ongoing. It's really a tedious process and requires a lot of attention. And we've been at the driving seat of this. And so that's really where we put quite a lot of effort on. Next to this, we put a lot of effort on setting up the infrastructure
Yeah.
in a way. I mean, I'm talking about execution and processes and so on, in a way that it is as agile as possible. That means we didn't start off with complex containerization and intensive DevOps practices. On the opposite, we started with very lightweight developments. Think of in the very first iteration as one database, one Git repo, and a VM, just to give you an idea. It's not anymore, it doesn't exactly resemble the truth right now, what I mentioned, but it was very important for us to not overthink, right? And go and do small incremental steps of adjustments, starting from the prop activity, working out some ideas, go from back test to production, and then iterate quickly on that rather than sit on design an architecture for months and then try out something only at the very end.
Yeah. No, interesting. And with the infrastructure, did you build it all yourself, or did you work with some of the suppliers that, the providers that are out there now to help?
So we did build everything internally.
Okay, interesting.
And then we have, as a team, we came in with a very important, let's say, skill that is IT. Besides our quantitative background and trading background, we bring and we value a lot IT skills and good practices, right? So, this was somewhat a paradigm shift because, in ENGIE, while there is a lot of very good coding skills when we're talking about the teams that are doing support in terms of analysis, in terms of quantitative research. It was not that common before we came that front officers, really traders, would actually code and deploy production software that executes, right? So we bring a new kind of approach, new talent, new skill set that allows us to build either in the team, really. We take care of really developing the tools to the tools to implement the business logic. We rely heavily on existing infrastructure for market access, for like bookkeeping and so on. But so let's say I really advocate for building things internally for us that work for the specific purposes.
Interesting. What's the reason that you advocate for that, doing stuff in-house?
The first reason is that by doing so, you learn a lot more. There is no black box there. And then, of course, you get to learn, and this takes some time. But, I think we do have this time. And also to do something, you need to be very much aware of what is it that you're doing. You need to know the ins and outs of what you're doing when we're talking about, especially about battery optimization, for instance. So I think I value this a lot. I think we have the right talent and skill within ENGIE to do so. And so that's, I think, good enough reason to, go for this kind of approach. One thing to mention is that in terms of market execution, for instance, we do not do that. We do not build our own bots that execute. That's clear. But the algos that, predict signals or optimize the batteries on the different markets, this is really, I think, where we have the right talent to develop a solid algorithm.
Yeah, the execution seems to be where most of the firms in this space I talk to, like, they find that a different skill set and it's challenging and it's easier to work with a company that have done that, themselves and specialize in it. But doing a lot of the stuff in-house, what have been the learnings? What have been the challenges?
Right. I mean, it has been quite a steep learning curve with regards to there's different dimensions that we had to handle in the past, let's say, year and a half. Starting from the paradigm shift I mentioned before, we are a new desk taking care of optimizing new type of technologies. We really had to find our fit, our place within the existing organization, one that is already moving, operating, and needs to do so 24/7 in a reliable, in a reliable way. So there we had to work our way through, for instance, interactions with the manual side, the manual trading, and to find the best way to operate, to collaborate, and to figure out what were the ways to interact. So, for instance, there is a 24-hour, 24/7 shift. On our side, we do not operate in a 24/7, say, whilst the algorithms run 24/7. So a very important part of what we did was to enable the manual traders to monitor efficiently our processes. What's tricky there is that we intend to design systems that are fully automated, right? So the number of times that you would need manual intervention is quite low. But when it's needed, you need the person in front of a screen to know exactly how to handle it. So that's the tricky bit that we're, I think, figuring out still, but we have a process to do so. That's one. But generally speaking, this kind of transformation really involves changes in every corner of the business. So we're talking from back office to market access, risk and market conduct, IT. So when we were starting, we could not even fathom the ways that we would need to work with all these different teams to integrate our business and to make it work. We would never be able to achieve this without the full management support. So really top to bottom.
No, I can imagine like the differences of if you're a prop trading desk that's setting up brand new and just wants to do algo trading, then all greenfield. It's very different to if you're trying to create an algo trading desk inside a very large utility with, like you say, 24/7 manual trading operations and processes and systems in place for a very long time.
Yeah, that's right. And I mean, the good thing is that, ENGIE is really all about people. And when there's a lot of people, there's a lot of interactions that need to be made and a lot of steps to take collectively. But people are really sold on the vision that we need to properly integrate battery optimization, renewable optimization in a full automated way. It's really at the heart of the business. And so we collectively move in this direction.
Yeah. Awesome. This podcast is brought to you today by Nimble Alpha, who provide systematic market insights and are trusted daily by some of the highest performing power and gas traders at tier 1 energy trading houses. Nimble Alpha delivers clear, data-driven signals across TTF, MBP, EUAs, German Power, Brent, and Henry Hub. They allow you to anticipate short-term trends, time executions, so you can stay ahead of volatility. So whether you trade spec, handle client flow, or manage risk, Nimble Alpha allows you to make sharper decisions with full transparency. In today's quant-driven markets, it's the perfect overlay of your fundamental research. So book your free trial today in the link below and get 10% off your first subscription. Stay nimble. So in terms of how you've gone through that process of setting up the desk, building the team, you said you've got a team of 6 now. So like what kind of people, what kind of skills do you have in the team?
Right. So I think in terms of skill set, the right, I would say there is the Venn diagram of IT skills, quantitative skills, and trading. Okay. So you really need to be able to come from from trading, let's say, to generate an idea. You see, so you need to be familiar with the market, familiar with the complexity that short-term power markets involves, and to be able through this complexity to kind of carve out a small, very simple idea at some point. And this is, let's say, the trading background that helps. Then you need to be able to formulate it as a quantitative problem in order to systematize it, in order to go back, find the right data, backtest your idea, and have the kind of statistical approach of whether this idea makes sense, when it makes sense, how can we convince yourself and your team that it makes sense. And finally, you need the IT skills to actually bring it to life. So we're, as I mentioned, responsible really to bring those ideas to life. So this is really the intersection. And I think the most important skill that is not a hard skill is really the pure hunger to uncover value. Okay. And I think this is the most important thing you need. It combines a lot with curiosity, but really hunger is really like the need to understand better, to bring value, to make your KPIs exceptional, and to deliver value, to even have a drive that comes from the impact you bring on the system. So we're talking about you are responsible to trade hundreds of megawatts of batteries, of flexibility that shapes and changes really how markets will be in the next, 5 years even.
Yeah, so that's interesting. So you feel that the people who have that desire to go and unlock the value have a bit of, what would you say it's important to actually be passionate about the work? Is that required, yes. Do you think?
I think it's extremely important to be, I think passion really is also part of the hunger I mentioned. So you really need to love, to be super passionate about, tackling those problems, figuring out ideas, even simple. I mean, you need to understand that while we are, I think, quite a good level in terms of quantitative skills, the first things that we deployed were super simple ideas, that worked, and then you build on top, right? So especially when talking about battery optimization, asset optimization, I mentioned before, there's no way that you would put some black box to run your 200 megawatts battery. I mean, it's way too big a risk. So while we have the talent to do all sorts of, data science, AI models, it's great. But what I see the most important skill is to be able to generate a simple idea, a simple concept, solve it, put it to production, see how this works, understand the problem better, and then progress like this. And the moment that you need to do something more complex, no problem, the talent is there to achieve this and to do this,
Yeah, no, that's interesting you talk about that, because I do hear from what I know is very successful algo trading shops. And they do say like the strategies that they have aren't like the most overly complex. complex. Like there's having simple frameworks and designs is very impactful from what I've learned still. So I think that people don't need to overcomplicate things.
Yeah, absolutely.
And let's talk about like the batteries that you said you're managing and how you're optimizing and what you've got in place right now. I think that would be interesting to talk about.
Right. As regards to the battery optimization, again, we take care of the short term, right? So maybe just walking through the whole chain. I mean, usually we have tolling agreements, so internal mostly. So there is a department of ENGIE that develops and builds, and then we do a tolling agreement, and then it comes into our perimeter where first there is some kind of long-term hedge. So there's another team that takes care of hedging this battery over the next years. And then when battery is there, so the first one was in October, the battery of Vilvoorde in Belgium, we start with first onboarding the tests. So we do tests to make sure that communications are there, everything has been delivered properly, and then we start with the optimization. So we do day-ahead bidding, we do intraday re-optimization, and ancillary services, right? So we have currently the ability to offer ancillary services in terms of free bids. And so we progressively develop the possibility to offer other kinds of capacity and so on. And then having done this, having this kind of capability, it's only an incremental, let's say marginal increment to move this kind of logic into a new country with a number of different configurations, but still the principles are the same, and then potentially to extend to other markets as well. So there is some limitations that comes to legacy infrastructure that needs to be revamped, but then, so we really focus on offering the assets to all possible markets. I mean, I think it's a common, let's say, knowledge right now that, the fit and forget doctrine of, batteries offering ancillary services only that we saw in Germany is going to maybe last a couple more years at best, and then we'll see what happened. The same that happened with UK, where now really the ancillary services have collapsed. The opportunity, to offer batteries and ancillary services. And so I really believe that multi-market optimization, so revenue stacking is also called, is essential to capture the right opportunities for those assets. And to do so, you need first really to unlock the possibility to offer all these markets, but also more importantly, to have the right data-driven approach to identify what's the right place and the right opportunity at a given point in time. And this is what we're working on.
Okay. Yeah, I was going to ask, like, when it comes to optimizing batteries, because it's such a hot topic right now, like, what do you think are the ingredients for like first class optimization in 2026?
I think the first thing is really having the possibility to access, those markets is important. It's just a necessary condition. But then the next best thing is data. Together with data modeling about how do you think the value of your battery, how can you model? Sometimes you are not even able to model, so you need to take a number of assumptions. I mean, even starting from intraday, modeling the intraday optimizations is, you can do it. It's very data intensive if you have order book data, and still you're not even sure that you will uncapture this value. When we're talking about large assets, large batteries, the effect you will have on the market is something you cannot simulate. There's a lot of volumes that are hidden behind icebergs that you will just not see, So it's a very data intensive problem that you cannot even be sure of the results. And then when talking about, for instance, ancillary services and offering of capacity, also there, the market dynamics, using data from the past to figure out the market dynamics is also a tricky business. So I think you need to be able to offer everything. The data that you have right now are able to paint a picture, but you need to be extremely good at assuming things, testing things, and iterate fast. It's really what we said at the beginning. So you need to build the ability to, experiment things with things and then change your approach.
Yeah. And when you mentioned like when you have like a very large battery and that kind of have an impact on the market. So what considerations are there when you're having to manage such a key asset in a particular market?
Right. So, I mean, you have first to consider liquidity. So, for instance, talking about Belgium, liquidity is not always there in the wholesale markets. So there is a risk, let's say, approach of, do I consider offering the battery, more in ancillaries? How much volume do I allow in intraday? It's really important to be aware of the liquidity risk, especially intraday. Day ahead is not obviously a problem, but really intraday is quite a problem. And there you have the opportunity cost of, what do I offer for ancillaries versus what do I trade in intraday? So this is the key problem. I mean, then you have physical constraints, right? So it's really, in a new asset class, at least here where, as I mentioned, a steep learning curve. We started off at September. And already now, things have changed a lot in our approach just because we uncovered problems that we didn't even know we would have. So, you can practice all you want in simulations, and we did extensively so, but then the battery came, and for instance, you have to picture that, a large battery is a collection of smaller batteries. Okay.
Yeah.
And one of the problems we had at first was, let's say, imagine that 20% of those small batteries. So let's say if there is 100 containers and each container, let's say, can give you 1 megawatt, just to sum up to 100 megawatt. If one container is at 95% charge, it cannot charge fully at the rate you would like, that 1 megawatt, for instance. You see, if there is imbalance in the state of charge between the different containers, then you end up in situations where you, let's say, bought from the market 100 megawatts, but your battery cannot physically charge 100 megawatts. So this is, a technical problem that we then had to solve by, of course, on site, but also modeling on our side should address this problem, you see. And this is just one of the many complexities that asset optimization brings, and that the additional complexity with batteries comes with the time coupling. Because if you anticipated charging now 100 and the battery does not deliver 100, then the energy you've sold in order to discharge is not there. So this is the kind of problems that, when taking care of the optimization in-house, you first learn about quite fast, but also you collect data that help you model things in a more efficient way.
Yeah. So there's been lots of, I guess, unforeseen scenarios since the battery went live.
Yeah, I mean, this is one, but yeah, I mean, I think because of the nature of 24/7 operations, everything that can happen probably will happen. It's just a way of saying that, yeah, I mean, it's been a lot of unforeseen events, but also this has been an opportunity to capture and automate most of these. And so, yeah, I mean, it's been a very interesting journey so far, and
yeah, keeps you on the edge of your seat,
absolutely.
For sure. But like, as a leader, what processes do you put in place to know that like you're in like a new greenfield trading project and things will, you're learning every day. So what procedures do you put in place knowing that there's going to be problems that are coming in from left field that week, that month?
Right. So First of all, we need to be very fast at spotting those problems. So we are setting up a number of features in our infrastructure that quickly, captures and flags these problems. We also monitor extensively. We see it's really first you need to spot things. Okay, if you didn't anticipate something, then you obviously need to spot something. So we have this concept of really gathering the data, generating alerts, and spotting issues. And then we move in a fast-paced development cycle where we list the problems, issues that we identified, and we go fast into solutions. So how do we solve this? Well, first ranking, what's the most important thing to tackle, and then we go about fixing it. And yeah, I mean, I think in the first maybe couple of years, so the past year and the next one, this will be very intense in the sense that you really build something from scratch. And my view is that we will capture most of the problems and we will be able to automate most of the core issues in these first couple of years, and then it will be minor incremental developments.
Yeah, that's interesting. So you'll see a lot of the problems come in that first 2-year period, and you can automate how to deal with those.
Yeah.
So you deal with it once. Is it manually you're dealing with it, and then you automate that, or like how?
Yeah, most of the time it's if something happens for the first time, it's manual. But then I mean it's quite. We have set up a nice tool set that allows us to really be flexible and address things in quite easy automated way, and then any feature is available. I mean, we have built a code base that serves all three activities. And so those features are immediately available to everything that we do, sort of. One thing I wanted to mention is that because we discussed the skill set that is required for the people involved, the approach of the team is really they are bought into the vision on what we need to deliver, and then they can independently work in proposing solutions that serve this automation purpose, and they do so in a very independent way, right? So it's really important that people are able to work autonomously without any kind of, say, interaction, very detailed interaction. Of course, I'm there to offer, and I'm quite involved myself in building tools and processes. I really take pride on the people involved in the team, that they can actively manage, these kind of problems very efficiently.
Yeah, so they have like high levels of agency. They're able to take tasks on themselves and go and get things done.
Yeah.
Okay.
Exactly.
And it's also collaboration key as well. Like they working, collaborating, knowledge sharing.
Essential.
I hear that a lot.
It's really I think collaboration is essential. There is quite a diversity in terms of skill sets. So there is, it's not equally spread, the type of skills for within the team. So, and there's also high collaboration with other teams, which is extremely important in an environment like ENGIE. Exactly. So working with analysts, working with quants, extremely important because you really have, let's say, two different speeds to which things work. So we operate in a very high, fast-paced environment that we, in our team, we need to fix things now, for instance. But then if some problem is can take 2 weeks to be solved, and we can think on it and sit on it and so on. That's really where the value comes from, support functions like this. Also, we have manual traders that are also extremely essential to capture, to identify risks, to flag them, and to come back to us with strong collaborations across teams is extremely important. Yes.
Yeah, and I've heard the collaboration between manual and Algo. as being pivotal, for spotting things, coming up with new ideas, and obviously dealing with problems quickly. How close are you guys working together? Like, are you on the same floor? Are you talking every day?
Yeah, it's definitely same floor, but also we're interacting a lot with respect to, let's say, spotting things in the execution of algos, but also in different market circumstances. And I envision that for the next, say, year and a half, we come even closer. I think it should be, let's say, almost the same desk,
Yeah.
in the sense that to be able to monitor efficiently the algos running, you need to develop a common understanding of how
Yeah.
things work end to end. So we should definitely, work as, we are one team. We should work a lot closer, but we're at a very good stage.
Yeah. No, I've heard that before. Like, the closer the better, and like teams basically working up, sharing desks and being next to each other, so they're just easier to collaborate, idea share, and that one team mindset is something that I'm seeing being done very successfully in some firms. And then other examples, which I think is a good idea, is like we're seeing like the newer breed of algo, newer breed of talent in this space. So algo trading, data science backgrounds. So those guys who've come from that STEM background and have got that coding ability, like earlier into their career journey as an intraday specialist, I'm seeing some good examples where they're going over and actually doing some shifts and actually being a manual trader, not full time, but they'll be part of it in that first 6 months of learning the job, because that's just how they really get a great understanding of the market, and they spot things. They can turn these things easier into algorithms as well, and signals. So I'm seeing that being done very, very successfully as well, that approach. Is that something that you guys agree with and think would be a good idea, or are you doing it as well?
I absolutely agree. It's a very good idea. It kind of reinforce. So doing some shifts and doing some trading reinforces your intuition. Helps you with generating new ideas. Helps you with building sort of a mental model of the market. So I'm definitely, in favor of this approach. And in my team, we haven't done this yet, just because of the need to deliver results fast. But it's something that we plan to do in 2026 a lot more. So besides collaborating a lot more with the manual trading, doing some shifts is really part of the agenda for 26, so that we achieve exactly what you mentioned, the results you mentioned. Yeah.
Nice. Yeah, no, I think that would be something good to look at for sure. So, Yanis, I'd be interested to talk to you about scaling challenges on the topic of also market access as well. So, what's your views on that?
Right. So as we started, building more and more strategies and having access to those large assets I mentioned with the batteries and going forward with renewables, we hit a first quite important barrier that was, the number of orders that you can put through the system and towards the exchange. More importantly, it was not only about the number of orders, but the number of order updates. And so we talked about briefly before about execution and how for us having to use a third party, let's say provider, execution is something we tune, but it's sort of a black box, right? And then you have the next step that is the exchange and how the exchange manages your orders. So what we noticed early last year was that our developments as a front desk that is quite involved with IT issues also served as a debugging service towards the entire chain of market access. So we were able to identify some troubles and then helped to solve them throughout the entire chain. And we found out also that, for instance, because of the accumulation of algo trading, let's say, strategies from different desks, from different places, the whole, I think, infrastructure of XBIT and the whole way of this single clearing and intraday is becoming a very, let's say, intensively used infrastructure that will only grow from here in terms of needs,
Yeah.
And so I think we are going to face some trade-off, at least in the short midterm, that is going to be how smart you want your execution to be versus how much volume you are able to execute efficiently. Because there's now a limitation on the number of updates you can perform on a given order. So I think this will be one to think about. So one issue to tackle and to think about quite a lot when you're moving to trading higher volumes.
Interesting. So is there any big issues that have emerged at the scale that were not relevant when it was purely manual?
Yeah, definitely. We have seen, compared to manual, quite a large increase, and it's something to monitor with respect to really the number of order updates you can perform. And this scales differently with different components. So how much volume you put on the market, and how fast and smart you want your execution strategy to be. So it depends on mainly those parameters. But because information is key, and because more and more of the battery values will go into the smarter execution, you have to be, I think, quite advanced, and this is a place we intend to advance a lot on in the next year or two.
Yeah. Okay. Cool. Thanks for that. So something that's probably important to talk about, given the size of your operations, is regulatory and risk considerations at ENGIE.
Right.
Could we go there? Talking about
for
batteries, large-scale batteries that you guys have.
Exactly. For a large utility, the regulatory risk is real, and we take it extremely seriously. So obviously, operating large batteries of the size of hundreds of megawatts you're right at the spot of remit. So you need to declare anything that you do in terms of an asset. You need to be very cautious at offering your capacity. These are non-negotiable. And also, in terms of market execution, things need to be extremely secure, if I might say. This is something we take very seriously, and also we have established there is internally a trading surveillance process where each strategy is very meticulously checked and thoroughly processed, such that there's zero, let's say, risk to any kind of regulatory exposure. This is really something we want to, let's say, to emphasize, and we want to put stress on, because it's another thing to have, let's say, some batteries that are some tens of megawatts around, and it's a very different thing to operate large scale batteries.
Yeah, I was going to say, what are the differences if you have a few large assets versus a number of smaller ones?
So on the regulatory side, so this is a clear one. Then I think, the other one is the degradation slash operational challenges we talked about before, right? So that's another one that's very important. And then liquidity. So you have this, again, this discussion where, if I had to sell in intraday in Belgium 100 megawatts last minute, I don't think you would find a market for it, So you need to be very thoughtful of how do you allocate your asset.
Yeah, awesome. And just moving lastly to like market outlook for batteries as we are going into 2026. What does it look like from your perspective, the market in this year?
So this year, I think, the value of batteries is with volatility, right? And so, we have seen already in the last at least 5-6 months, volatility is somewhat reducing, right? And so, I think in the next year and a half, we probably will see it reducing as well. So I think there is a clear need to figure out how to spread, let's say, your battery amongst the different services. And I think we really need to collectively, battery traders improve on marginal spread captures, right? So I think we're moving away from, simple strategies. We're progressing on some more, predictive / opportunity arbitrage within the different markets to bring more value.
And why is it that volatility has decreased in recent months, and you think that trend will continue in 26?
We see like prices from, at least France, Belgium, Germany, and I don't see, this kind of trend that was there even early 25 or 24. And so I might be wrong. I would probably like to be wrong. But I think as we move on with more batteries and with more algo desks, the obvious opportunities, the obvious back in the days are not there anymore. And so you need to be a lot more complex, or a lot more, not complex, but exactly, sophisticated in the way you approach the problem.
So that's probably linked to the question, like, how do you win in 2026 when trading batteries? What do you think the key criteria is going to be?
I would say the word is allocation, like smart allocation, dynamic allocation is the key on the different market floors.
Yeah. And what does that look like? Smart allocation. What do you mean by that?
So predictive power. So being able to tell in their head what kind of volatility, what kind of opportunities you will get to see in intraday, in ancillaries, and so on. Then moving on, capturing the opportunity, the intrinsic value of a battery as well as the extrinsic. So that means, predicting the prices, being able to be right and capture this extrinsic value. Because I think the intrinsic value of batteries with the developments that we will see in the next year, it will disappear, or at least it will shrink. Together with the costs of degradation and cycling. So you need to be a lot more thoughtful of how you spend your cycles throughout the year. This, I think, will be the trend on the next year.
Yeah, so it's going to be another interesting, exciting year to be in this space, but you probably, you need to level up this year. You can't just stand still.
Absolutely not.
Yeah, which keeps everyone learning and improving, which is making it exciting. So, look, Ioannis, thanks for your time. Really interesting conversation there. It's been great to hear about all the good work you guys have been doing, the learning, the challenges, and I think obviously it's impressive to see the size of the batteries that you guys are now optimizing and doing all in house. And obviously, you've got a lot more batteries coming online in the next year or two. So it's going to be an exciting couple of years for you guys.
Indeed, an exciting couple of years. We're talking about 10 gigawatts of, let's say, globally for ENGIE. Just on battery capacity is something quite more ambitious on renewable side. that we intend to optimize and to trade in the next year as well. And then there's also a couple more interesting activities that we hope to onboard when it comes to flexibility behind the meter and so on. So yeah, I mean, it's really exciting and I wouldn't have it any other way. I mean, it's definitely a challenging topic, but I think it's the place to be in terms of algorithmic trading and optimization. So really looking forward to 26.
Yeah, every algo trading client I work with, if they don't have batteries, they're desperate to get them. So yeah, it certainly is where everyone wants to be, and you guys are in a unique position given the size of the batteries you have, and you're probably seeing things before everyone else, so which is quite unique as well. So yeah, really glad to hear that sharing that knowledge, sharing that experience. So yeah, I do appreciate your time. Thanks again, Ioannis.
Thank you very much.